It's Wednesday, April 23rd, and this is your Stock Market Daily News Podcast, your quick 2-minute rundown of all things markets from the close on Tuesday. U.S. equities powered ahead yesterday as investors eyed earnings and shifts in sector leadership. The S&P 500 added just over 0.4%, finishing at 5,237. The Dow advanced about 0.33%, or 120 points, while the Nasdaq outperformed, rising almost 0.75% to close at 16,351. Today, we'll break down which sectors look undervalued, why AI infrastructure keeps dominating the headlines, and the latest moves in crypto, and yes, a big warning sign for software stocks as investors grow more picky. Let's get into the stories that moved markets. First up, undervalued stocks were in focus as investors hunted for value in an uncertain environment. A new screen identified names like Allstate, Ryanair, and Arch Capital, all boasting solid cash flow, low debt, and double-digit return on equity. For example, Allstate closed up 0.4% to $147 after announcing a fresh $2 billion buyback and continued margin improvements. The takeaway? This is a market where fundamentals matter again, and stocks with stable earnings, growing free cash flow, and solid management are attracting new buyers. Second, AI infrastructure continues to shake up the technology sector. Mining and data center specialists Hive Digital and Keel Infrastructure jumped roughly 7% each after Hive raised $115 million to expand global data centers, while Keel sold assets in Latin America to refocus on AI compute in North America. This signals how companies that once leaned on crypto are now pivoting to artificial intelligence, chasing growth where corporate demand looks insatiable. For investors, owning the picks and shovels in the AI boom remains a popular theme. Switching to the UK, regulatory changes have reopened the door to tax-free crypto investing. Strategy, a London fintech, became the first to offer crypto exchange-traded notes within an ISA account, allowing Brits to buy Bitcoin or Ether ETNs without paying capital gains tax. That's a positive step for retail investors and could boost demand for regulated crypto investment products across Europe. Now, let's talk about market leadership and sector shifts. According to BlackRock's latest update, AI exposure, large-cap stock resilience, and energy security are major trends. The S&P's largest companies are holding up best thanks to strong earnings, while bond stock correlations remain highly unusual, pushing more investors toward alternative assets and shorter duration tips. BlackRock's guidance? Stay nimble and use active management to sort winners from losers in a market where easy diversification isn't working like it used to. Finally, a warning shot from the B2B software world. Legacy SaaS stocks are under pressure because their tech hasn't kept up with the pace of AI. Many B2B stocks saw sharp sell-offs in recent sessions as investors realized that traditional platforms are lagging behind new AI-powered solutions. Watch for more volatility in software and tech midcaps as competitive edges become crucial. Quick recap. The S&P closed at 5,237, the Dow at 39,612, and the Nasdaq at 16,351, with value and AI infrastructure stocks showing strength. Investors remain focused on fundamentals, sector rotation, and ways to play the AI and energy transitions. Earnings season continues, with several big tech names reporting this week. Don't forget to tune in tomorrow for more insights, subscribe for daily market updates, and stay sharp out there.